Joining us so much today. We're going to do a live technical analysis overview. Pretty much, we're just going to go over stock charts. The goal of this webinar is to keep it extremely simple for you guys, because oftentimes you'll see charts with hundreds of lines and multiple different indicators. And it's very important to note that everyone sees things differently. But today, I'm going to teach you a very simple and effective charting setup that helps me personally easily digest price movements and market direction. So we're gonna have a few different sections to this tutorial here. The first section here is gonna be, it's gonna give you a detailed process on exactly what charting platform, software to use, exactly how to set up using the settings, exactly the most simple and effective charting setup that I've had in my experience. The second part is going to be explaining a little bit more about how charts actually work. So once we have that chart in front of us that we've customized, I'll be able to explain it to you and tell you a little bit about what every single thing on that chart means and why it's important and why we use it. So without further ado, what we'll do is we'll just start basically going over some charts here. So the first thing I just want to show you guys today is there's a few different things that people think of when they think of stock charts. So I know more experienced people will be familiar with things such as candlestick charts. Other people, such as, if you have a 401k or something else, you might just be familiar with line stock charts, such as the one you see on my screen right now. You can see the volatility index or the VIX on the screen right now. And what we're going to do here is we're going to dive a little bit more in detail and show you stuff a little bit more similar to this. And this is not a very beautiful one that we're going to put together. But as you can see, this one looks a little bit different. This is candlesticks compared to just a line chart here. So the first thing we're going to do here is go into how can we even access a good charting platform or good software. So there's many different platforms out there, and to each his own. But personally, I have always used TradingView.com, and they are a paid service. However, you can do everything that I'm about to show you in this free webinar for completely free, and you're not going to have to pay to upgrade to any one of their plans to be able to create this charting setup. So the first thing you're going to want to do is go to TradingView.com. You can see it here on the screen. What you're going to see here is on the top, you're going to see a bunch of different markets and indexes. Right here, you have the S&P 500, NASDAQ down big today, oil, different kinds of cryptocurrencies and currencies. It also acts as a social media platform. I won't get into too much of this, but it might be something you want to explore. Different traders can have different ideas and stuff on this platform. What we're going to want to do is we're going to want to click join for free. So if we click that, we're going to get over here to this join for free area. What we're going to want to do here is put together all of our different credentials and set up an account. It should be very simple here. It's just making me do a few quick verification things. But once that's done, we'll just click easily sign up here. And it's going to want you to verify your email. So if you guys could just bear with me for a second while I confirm that email. And I'm going to activate it, which I just did. I clicked it. And so it's going to immediately prompt you to sign up. What I'm going to do here is I'm just going to click continue, and we can always do that later. So now it shows that we have an account here at TradingView. It's a complete free account. And so the next thing we want to do is be able to go find a stock. So we have this search bar up here, which is asking for different kinds of tickers. And what kinds of tickers do we want to go search for? So it also can ask us for different people and trading ideas. But what we're going to do is we're going to want to stick with a ticker. And just give me 1 second here. It's taking a moment to load. Usually it doesn't take too long, but what we're going to do here is we're going to open up the S&P 500 index chart here. So when you click S&P 500, you can also just type in SPY or S&P 500 into the search bar. You'll be confronted with this simple line stock chart. And what we're going to want to do is we're going to want to open the full featured chart. So every time you click on something in the search bar here, it's going to take you to the overview here. And what we're what we're going to want to do here is going to click full featured chart to go and see the real time move. So right now the market is currently open, and we can see that it's currently trading, and we do have candles that are forming on the chart. What we're not going to be too worried about what's happening right now and in this current time period. What we're going to do is we're going to zoom out a lot more and look at fundamental analysis from a more macro perspective and show you different kinds of indicators that are not already existing on this chart. So what I'm going to do now is show you the exact settings to make this chart look like the charts that I use. So the first thing that we're going to do is right click on the chart, and we're going to easily change the color theme down here to dark. So right now it's light, and we're going to click dark, and it's going to completely change the layout. I personally just like this. It makes things simple. And again, to reiterate what I said in the beginning of the webinar is that, in my opinion, simple charts are good. People, can draw a bunch of lines on there, but when it's easy to read, we can easily interpret information very quickly. And with charts, we want to get very updated information and be as efficient as possible. So we've changed it to the dark theme here. Now what we're going to do is we're going to remove these grid lines. So we're going to also right click. Now we're going to go into settings here. So color theme was here. We're going to go into settings. When we go into settings, we're going to go down to appearance over here, and you'll see vertical grid lines and horizontal grid lines. What we'll do here is we're going to click here, and we're going to click this one right here, which is the same color. And we're also going to go on horizontal grid lines, and we're going to click here, and we're going to click here as well. So what that's going to do is really, really clean up our chart here, and we're going to be able to see, just the basic price action and what's going on here today. So what's very important that I want to show you guys is, so once you have this set up right here, we have different buttons up here that we can click. The first one here is just showing the ticker on what we're what we're viewing right now. We're viewing the S&P 500 index. Here is the amount of time that you can have on a chart. So for example, right now we're looking at the 3-minute chart, and I'll get into candlesticks and what that means shortly. But right now I'm just going to adjust this onto the 1-day chart so we can take a look a little bit more on a longer time frame. So the other thing that I would do to set up the chart as to how I usually use it is use something called Heiken-Ashi candlesticks. And what you're going to want to do here to get that is you're going to click on indicators. And unfortunately, mine is already set up with Heiken-Ashi. When you create a new account, you're not going to be able to do that. What you're just going to want to type in there is HEIK, and you just want to type in the name of the candlesticks there. And it will show up for you to click on it, and it'll change the view of the candlesticks there. The next thing I want to do is add a few different indicators, which I use. So the first one is going to be stochastics, and it's spelled STOC ASTIC. And we'll click stochastic, and it'll show up right down here. We just saw that big jump on there. What I'll do here is I'm going to shrink it a little bit just because we don't want to see it too much. What I want to do here is get this volume to disappear, which I believe we can do. So this indicator down here is one that I do not want to look at right now. It's called volume. We might go over that later, but what I'm going to do is I'm going to go over here and I'm just going to click X, and it's going to disappear. For example, we just put stochastics on. If we wanted stochastics to disappear, we can just click the X here. And if you just want to hide it for the time being, you can click the hide button, and then also you can unhide it at the same time. So right now, this is pretty much how I like to keep my charts. Again, it's super, super simple here. The main indicators that we have on here right now is stochastics and Heiken-Ashi candlesticks. We got rid of the grid lines, and we changed our view on TradingView.com to dark theme. So that should be pretty straightforward to you guys and get you this charting setup, which is what I like to use. It doesn't seem too confusing. But now I wanted to introduce you guys kind of section 2 of this, which is going to be going over what a stock chart even means. So this can be very confusing to look at, but if we break it down here, let's break it down to the X and Y axis. So the X axis is our bottom axis right here on the chart, which is showing February, March, April, May, June, etc., which is time. So your X axis is going to be time, whereas your Y axis here is you have different prices. So we have currently trading at 25.79. And we have things like 3,000, 3,400, et cetera, where the S&P 500 has been before. And those are prices. So what we're analyzing here is an asset or something's price over a period of time. So x-axis, again, is time, and y-axis is price. And what we're going to do here is we're going to be looking at different charts and different assets and securities and viewing them based on their performance throughout time, and hopefully making future inferences about price action and where a security or stock could go based on historical trends and historical price movements. So to break it down, I think the definition of technical analysis is using past performance and past price trends to analyze and predict future price movements and whether a security will appreciate, depreciate, or stay constant in price. So the next thing I want to do is analyze candlesticks for you guys. So what I'm going to do here is just Google candlestick charts on Google and give you a little bit information onto what this really means here. So we can see that a lot of different candles are visible on this chart here. And what we're looking at as each one of these means something different. So we're on the 1-day chart right now. And what that means is we go on the daily, and the daily means that each one of these candlesticks, so this candle, this candle, this candle, this candle, and this candle is 1 day in time. So again, our x-axis is time, and what one candle on the daily chart is showing us is 1 day of price action in one chart. So if we go a little bit more on a shorter time frame, we can click the 4-hour here. And we're looking at each candle, this candle, this candle, and this candle is all 2 hours in time frame. So this is a more zoomed up view, if that makes sense. So what does a candlestick even mean? How is this calculated? How is this calculated here? So how a candlestick is calculated is that the ending price on 1 day is going to sorry, let me simplify this a little bit. So a stock will open 1 day at a certain price. During that time and during that day, the price will fluctuate between different price levels. So for example, say the S&P 500 opened at 250 today, or SPY opened at 250, and it went up between 260 and 240 intraday. So what we're going to see is that the asset, it maybe opened at 250 here, but it went up to 260, and then it went back down to 250 at the same time. So what these are is these are the high price, and this is the low price, and this is what we call a wick right here. And that shows that on the daily chart that the price of the security has gone in between those two prices there. So what we're going to see here is that it also tells us a little bit more information on where an asset opened or closed. So say SPY opened at 250 here. It went up intraday, within the first 30 minutes to 260. So it wicked up to 230. And then immediately the market sold off down to 240. And it wicked all the way down to 240 in the same day. And eventually it got bought up a little bit more, and it closed around 255. So all of that information was conveyed in that one candle right there. So it's very important to be able to analyze candlestick charts and look at long time frames on where things have gone. So for example, today we can look at, in the past 4 hours here, it looks like we opened right around 267, and the price had fallen all the way down to 250, 2510 area. And it's been bought up a little bit and wicked back up to about 250 area. So that's what we can see on this candle, and we can tell on different price movements throughout history what exactly happened during that time. So that's the basics on kind of candlesticks and stock charts. And now I just wanted to go into a little bit more on the most basic indicator, which I use. Which is not listed on, which we didn't have to use for the setup, and that is called support and resistance. So what I'm going to do right now is I went back on TradingView.com and I opened up Apple, and what we're going to do is we're going to do some support and support and resistance analysis on Apple here. So let's go out to the daily chart here, and let's analyze Apple based on historic trends of basic support and resistance. So let's focus first on support. So right now, we can see that Apple has been falling a lot recently. And it seems that, Apple had appreciated for a very long period of time in the bull market and stopped out around, 330 area. And since then, the market's been very brutal with this coronavirus scares. And it's fallen about $50 down at this price point that's shown via the candles in this chart here. So an investor might be wondering, when is it a good time to buy Apple? Because right now it's been selling off. And in the past, if we look at historic trends of Apple selling off, we have Apple selling off for a long period of time here, Apple selling off for a long period of time here as well. And investors are wondering, where will this end if I want to buy Apple stock? So a very basic way that investors will do this is what I'll do here is I'll go on here and I'll click horizontal line. what I'm going to want to do here is look at where has the price bottomed out before and where has it had trouble falling through before. So what I'm going to do is I'm going to look not over here. I'm going to look over here in the chart in the history of the chart. I'm going to see where has the price previously stopped out before. So what I'm going to look on here is I'm going to look and see that, okay, right here around this level, about 215 area, it looked like the market or Apple had a tough time breaking this when it wanted to go down around this September to August area right here. And if we want to zoom up into that a little bit, we can see that, it was going up and it seems like maybe the market wasn't doing too well, but investors were able to keep buying pressure over that 214.5 area. So what we're going to say is that's going to be somewhat of support, and maybe not, that might come in play if we get some big red candlesticks that come down here. Maybe this might be a point where the market could bounce Apple, and Apple could potentially bounce off. And as we can see, there's many different levels in here. I easily see one about right here, and I also see one on the longer time frames right about here, which is interesting because it looks like we have wicked under that support today. So it's important to realize that support does not always work. However, let me draw your attention to one area where it did work, and that would be on my previous example was if we scroll back here, to a long time ago with Apple, is that, it was appreciating for a very long time. This is 2016 to 2018 during the bull market. And then, we were seeing some resistance up in here, a pretty sharp rejection around 230. And the price was pretty stable for a decent amount of time here. And keep in mind, each one of these are days here. So for about, 1 to 2 weeks here, that Apple had a tough time, breaking down over this level. Eventually it did break down over this level, but we did see that investors were buying this level, and that we weren't seeing a ton of sellers, and that these candles were very neutral. These are very neutral candles compared to very sharp red candles and very, bright green candles, may I say. And what ended up happening is throughout time, we looked when the stock price came over here, and if we were able to draw this line over here, we were able to say that, hey, maybe the price might not break down over this level here. So we might be an investor, we might want to buy in this level here, and say that, maybe we're less confident about buying an asset if it broke under there, but we could justify buying that stock over this support level, if that was the case, we would have been able to capitalize on a large amount of gains, and we would still be up on that pretty much. So that's a really quick way of using support. I really urge you to look on YouTube and Google on support and resistance. It's probably the basic and maybe I would say the most frequently used indicator across the markets. And I would say it's very reliable, and that I think that it's been proven to work many times. So going off of that, why don't we go to resistance? So let me pull up something that's not been doing too well recently. Why don't we pull up, let's say retail. Okay, let's go over to Target. Target recently had earnings. They're down a whopping 10% today, which is unfortunate. But yeah, so this is looking, this is Target here. If we zoom out to the very long-term chart, let's go to the monthly here. We'll see that Target has been, appreciating for a very long period of time here, and that it's been, it's been pretty quick to recover in periods of downturns, even though, it's going down today, is that it might go up again long term. So an investor might say, hey, I want to buy, Target, but I'm not sure where, right? So if we look at this chart, let's go over support one more time really quick here. We see that there's no real support in any of these ranges here historically, and that might give investors, a thought process that, hey, I might be able to, I might short this security because it might not see any more support until, what I'm seeing is, this is the first level here. This is what I would call the traffic area, where it did eventually break down, but in the past it did have a tough time breaking over that level. So why don't we invert this a little bit and go over to resistance? So what I'm going to do is to show you guys resistance, I'm going to change this to red. what I'm going to do is I'm going to make this a little bit darker so you guys can see. And we'll show you kind of what this means. So resistance is the exact opposite of support. So what support tells you is that the asset might have a hard time breaking through this level on the downside, and we might be comfortable buying it and holding it above this level. What resistance is going to tell you is that the asset may have a tough time getting over this level, and we might want to, if we're in this asset and making money on it, we might want to sell this asset because it's not going to be able to go up past that level, or maybe we're going to monitor this resistance level as an area for a potential rejection if we're a short seller or we're looking to buy puts or something like that. So we can also do it on target. And what I'll show you here is from 2018 to kind of early 2019, the target trends is we were going up here. There must have been a market correction, or it looks like earnings was pretty bad here, and the stock really tanked to easily recover again to these levels here. What we saw here is that, before this earnings period, Target did really, really well. But all of a sudden, we had this very harsh rejection, and the price was unable, to sustain a move over this, 90-50 level, for a very long period of time compared to the others. So that was, a 5-month period where it wasn't able to get through that. So during that period of time, that would be classified as, all-time high resistance. That was the highest that Target had ever gone over. So, if an investor bought, down in this level here, we'd be looking at Target to see, where would we potentially want to sell this asset, and where could it potentially stop with this, this bullish momentum here. So if we were an investor and we bought down here, 60, 65, 66 after the earnings report that said, hey, Target's really going to recover, we're really going to be monitoring this point here, which is the top of the wick of the candlestick of resistance, which that's where Target had a really tough area of getting through. And what we can see is that if an investor would have bought over here and he would have rode the trend, this resistance, it had a tough time. Again, it wasn't perfect. And again, stock charts aren't perfect. Technical analysis is not perfect. But, if we would have sold up here, we would have had a chance to miss out on that drop there. And that this resistance did actually act as something that acted as, a resistance of the stock moving higher, if that makes sense. So again, then we can look at it vice versa, and we can look at the support here. And what I'll do is I'll change this to an orange here to show you support, is that although the stock did drop from this resistance area, it easily was picked up back from that support area right here. And investors were easily able to capitalize on those gains right there. So support and resistance is a very, very important tool that can be used on both bullish stocks and bearish stocks. It can be used on any time frame as well. So right now I'm looking at very long-term time frames. We can also go on a more, short-term time frames if we want to go on something like the 2-hour per se. And we can also look at other kinds of resistance levels, such as right here is on the 2-hour. During earnings, Target, I know Eagle investors here, we recently played Target earnings where we had a profitable trade, and we were betting on, different resistance levels and different support levels, and Target was unable to break that resistance level of about 112 there on earnings. So, if we were able to forecast that before earnings, that would have been something very profitable that we were able to, utilize on an instrument in the market. So what we can use with charts here is we can use support and resistance to identify past trends and maybe what could happen in the future here with Target. I'm not sure, if the support's going to bottom out here. We're going to continue to fall. That's up for grabs, and that's up for your interpretation. So the next thing I wanted to go off of here is stochastics, which is the bottom indicator here. And let me show you guys stochastics here on Apple stock, just because I believe I've shown some stochastics tutorials before using Apple bull markets and kind of how this has been used before. So I'm going to delete support and resistance. And right now, what we're going to do is we're going to go on a more closer up time frame. We're going to go on the 4-hour, and actually no, we're going to go on the 2-hour here. And what we'll do here is we'll look at the complete bull market that we experienced over kind of 2019 area right here. So as you can see, there was not very much volatility during this time, especially in Apple stock. This is about August 2019 to about January 20th January of 2020. So pretty recent here until we recently had this big correction. We're going to look at this bull market here, and I'm going to show you how stochastics was used to be able to buy the dip, if that makes sense. So on a lot of securities and what a lot of investors, and if you have a 401k, is you're not really looking to short securities and buy puts and buy calls. You're looking to buy stock, and you're looking to buy stock. So what investors look to do is they look for very solid companies. And what I would say is a solid company would be something like Apple, who have a lot of long-term growth, who have shown in the past that they can deliver on their promises. And what they want to do is they want to be able to buy low and sell high. So what stochastics can help us do is identify, if we know that there's some kind of trend that's going on, we're able to identify where's a good time to capitalize on that trend. So what stochastics is doing is, the number one thing we have to know to be able to utilize stochastics is whether the long-term trend of an asset is up or down. So I would really say that it can also be used on shorter time frames, but for now, let's say long-term. And so what we're identifying in this chart right here is that Apple was in a bull market. So this was an uptrend. And let's look at this from an investor standpoint, or we want to buy calls, or we want to buy stock in Apple. And we're going to look at stochastics here. We're going to say, how can we use this, to help us calculate when and the time period on when we should be buying this dip to make money on these assets. So what we're going to be doing here is that we're going to be looking at two different levels here. We can see that there's a purple level. So disregard all the squiggly up and down, and just look at this purple shaded region and these black shaded regions on the top here. So the purple shaded region stops at about 20 here, and the top is 80. So what we're going to be looking here for here is breaks of 20 and breaks of 40. So I know many of you might be familiar with the relative strength index, or the RSI, which tells you if something is overbought or oversold. This is not the same, although it may look the same, and we can classify as something as maybe overbought or undersold in this level. What I would say is this is too high and this is too low. That's how I would classify in stochastic. So we identified this is an uptrend, and the stock is slowly uptrending. So what we're going to want to do here is we're going to be looking for when the stochastics dips below 20. And since it's an uptrend, we want to be buying those below 20 dips every single time that it happens. So if we look at it, so when the stock, the bull market is just starting here. So we might not be super confident here to buy this dip here, but say you're an investor and you bought down here, right? We go up. Okay. We might, and it falls back down again. Okay, this might be another good opportunity to buy. It's going to go up again. We didn't break necessarily here, but momentum slower. Maybe we'll wait a little bit more. Okay, we broke down here, but our price is still well above our entry price where we bought in when it was 20. So the price of the asset is appreciating, but we can still buy this dip here and we're able to make money, if that makes sense. So we bought this dip, it went up. We bought this dip, it went up. We bought this dip again, it went up. We didn't necessarily buy this dip. We didn't buy this dip either. It went up, and we bought this dip here. So what it's doing is it's helping you realize where the almost the undersold or turning point opportunities. It's a momentum indicator. Where's the momentum turning during a certain trend? So we're looking for a break of 20 here, and we're looking to take advantage of breaks of the the low here during the uptrend. So this can also be used on the contrary for depreciating assets. So what I'll do is I'll open up something. Let's use something like Oxy. So I know oil has been tanking recently, and it's been getting hit pretty hard with the market. Let's see if we can pull this chart up. Okay, awesome. So what we'll do here is let's take a shorter time frame here and show you how this can work for almost day trading, swing trading. So what we're going to do here is we're going to pull up the 5-minute. And what this is showing us is this is from the 9th of March here and the 6th of March. So this is from the start of the week here. So we're just looking at the start of the week and how much oil has gone down. So obviously, if we were paying attention to the fundamentals in the news, we could tell that things are pretty bearish for oil, and that we're probably not looking to be long on oil right now. If anything, we're looking to short oil. And if we come into a stock, we look at a stock chart with that general bias that we think that the long-term trend is down, then what we're going to be looking at is we're going to look to invert how we're looking at stochastics. And what we're going to be looking is, instead of buying when it's low, we're going to be looking to short or sell when it's high, if that makes sense. So what we're going to be doing here is, so we saw that it gapped down really big on the open, and immediately it came back up, and there were buyers in the market on Monday, in the first 15, 20 minutes there, which took it back up. Momentum is pretty high there. And since, this is a pretty bearish fundamental stock, this might be a good opportunity here to go short on the asset. Again, it doesn't always work, but we could go short here. It's going to go down. Keep in mind, since this is a bearish trend, we aren't paying attention necessarily, and we don't want to buy necessarily here, but we might look to cover our short in this scenario because it could come back up again. It came down, so we shorted up here. We shorted. We came back down. We covered. We waited for it to come back up. We shorted here, and we covered here, or maybe we waited for it to be a little bit more long. So it was very, very efficient here, to be able to forecast that and say, okay, I'm going to short the pops and short the pops on a decreasing security, and on something like Apple, the appreciating security, we're going to buy the lows or buy the dips here. So, if we're going to go, closer here, and it's not always very accurate, but if we're shorting these pops and short this one and short this one, eventually it's going to be profitable. So this is just an indicator that I like to use. Again, I'm not perfect at explaining everything. I really recommend you guys take a look at YouTube and just general Google articles. What I would say is that with charts, simple is better. There's no need to complicate your trading and your charts. You should easily be able to look at this information and easily digest what you think is going to happen or what just happened. If you have 100 different trend lines and support and resistance, it might get a little confusing and you're not sure what to trust, if that makes sense. So what I tell you guys is that I trust stochastics, I trust support and resistance, I trust Heikin-Ashi candlesticks, I trust candlesticks, and I trust TradingView.com. If you're looking to create any kind of similar chart setup, feel free to reach out. I'd be more than happy to help. I really hope that tutorial helped you guys with the basics of kind of understanding stock charts and these different indicators that we use on a day-to-day basis. The last thing I want to do is probably show you how I invert my charts occasionally. So what we'll do is we'll open the S&P 500 ETF here, or the SPY, which is the tradable security to help us bet on the S&P 500 index. And what we're going to do here is let's go on the 2-hour chart here. So as we can see, the market's been brutally selling off for the past couple weeks. And what I'm going to do is, it seems like, we're seeing headlines that we're entering a bear market here. This is no longer a bull market. This is a bear market. So we don't want to think like bulls anymore. We want to think like bears, and we want to think like a short seller. And what I want to do here is, so I want to invert my chart. So what I'm going to do is I'm going to press Option on Mac or Alt on Microsoft and click I or invert. So Option I or Alt I. And what that is going to do, Option I, is going to invert your chart. So unfortunately, it's not going to invert your candlesticks in terms of their color. But what we're going to do is we're going to completely put ourselves in the shoes of a short seller, if that makes sense. So let me walk you through my thought process kind of when I see this here. And let me get rid of stochastics here because this isn't going to necessarily be accurate here. But what I'm going to see here is I'm going to be a short seller, right? So say instead of going long on the S&P 500, I'm looking to short the S&P 500, right? So instead of the asset going down when my chart's inverted, I want the asset to appreciate in price if my chart is inverted and I'm a short seller, if that makes sense. So right now I'm a short seller, but right now I'm bullish on this chart, if that makes sense. So what I want to do is see that when am I going to be bullish on this chart and when am I going to be bearish on this chart, and invert that to help me make decisions as an investor. So for example, what I'd be looking at here is that, the trend is very strong, first of all. This is a 2-hour. Immediately with this coronavirus, the market's been going up. We had a small bounce here, and it's just continually beginning to go down. So what I'm going to do is say, if I'm along, if I'm looking to buy this right here, this, it could potentially have some more upside. I'm not necessarily trying to fight this trend here. So maybe, what this tells me as an investor and a bullish investor is that, if I'm a short seller and I think that this could have some more upside here, maybe it's not time to buy the dip yet. Maybe I shouldn't go buy my Apple, my Microsoft stock yet. Inversely, let's zoom out here. Let's go on the 1 day and let's look at the inverse of this chart, right? So we can see that this is very long. So this is from here to here is all 2018 here. And from here to here is about 2019 here. So what we're going to do is we're going to look at different resistance points on the inverted chart to see that where the S&P 500 might be able to bottom out. So what we're going to do is we're going to look at, okay, there's some resistance there. There's some resistance here. And it's looking like there's some big resistance at the bottom of 2018 right here. So what we're going to do here is then I'm going to zoom out here and I'm going to look on this 2 hour and I'm going to say, okay, so it seems like, there's some support and that maybe as a short seller here, I might look to take profits a little bit in anticipation of a potential bounce like this or a bounce like this. This is just kind of what I'm seeing on here. But it seems like there's some resistance coming up, or we're already kind of in maybe one of these traffic areas. In history, we're in one of these traffic areas, so maybe I should look as a short seller to start maybe taking profits or be a little bit more careful on buying puts and highly leveraging myself into a bearish position. So that's completely up to me. But what I would say is everybody be able to put yourself into the shoes of both a bull market investor and a bear market investor. Here at Eagle Investors, we want to make money when the market's up and the market's down.